Today, I am going to share with you the details of a book based on the legendary investor Charlie Munger. So, without wasting any time, let's begin the summary of the book. This book is a collection of Charlie Munger's speeches, conference talks, media interviews, lectures, and writings. In it, he shares what his thought process is before making investment decisions and how, in general, he views life. When I was reading this book, one thing I really liked personally was that while other investors tell us where to invest and which ratios to compare, Charlie Munger tells us to invest in ourselves. He advises us to challenge our thinking patterns. He believes that you can get better returns from investing in yourself and developing your personality than from any financial investment. First, let's learn a little about Charlie Munger so we can all understand why he is such a legend and why people admire him so much. Charlie is an American investor, businessman, and the vice chairman of Berkshire Hathaway, which is Warren Buffett's company. For decades, Charlie has been Warren Buffett's close business partner, and his role in the success of many companies has been immense. He was born on January 1st, 1924, in Omaha, Nebraska. This means that on January 1st, 2024, he will turn 100 years old. He finished his JD degree in 1948 from Harvard Law School, but his true passion has always been investing and finance. So, he practiced law for a few years and was quite successful, but gradually he moved into the field of investing. In 1978, Charlie Munger became the vice chairman of Berkshire Hathaway, which was a struggling textile company at the time. Together with Warren Buffett, he turned it into one of America's most profitable companies, which is still very successful today. Warren Buffett has said many times that Charlie is the best business partner and one of the smartest persons. So, that was the introduction about Charlie Munger. Now, let's come to the learnings. The first lesson I learned from this book is about his investing strategies. Number 1, look for high-quality businesses. Charlie Munger always invests in high-quality businesses that have a strong competitive advantage and are very durable. This means businesses that have something their competitors don't, i.e., they should have wide moats, and the business should be able to survive in the market for a long time so that it makes money in the long term. For example, Charlie Munger invested in the Coca-Cola Company, and you know that Coca-Cola is one of the world's largest companies, with its product available in every country. Similarly, Warren and Berkshire have invested in high-quality businesses like Apple, Bank of America, American Express, and MasterCard. Charlie Munger has a famous quote, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Number 2, invest in businesses you understand. Charlie says to invest in businesses that are within your circle of competence and are easily understandable. Circle of competence means a field in which you have a lot of knowledge. Charlie has always been interested in the chocolate business and has done a lot of research and understands the market well. That's why he invested heavily in See's Candies, a very popular chocolate manufacturing company in America that has been making chocolates for the past 95 years, because he understands the chocolate business. Number 3, look for a margin of safety. Charlie Munger and Warren Buffett believe in a margin of safety. The greater the margin of safety, the lower the risk of loss. In 1960, American Express suffered a huge loss, due to which its share price, which was $65 in November 1963, fell to just $37 in 2 months. Charlie and Warren saw this as an opportunity and invested heavily in it, and this investment became one of the most profitable investments for Berkshire Hathaway. Similarly, they invested in the Washington Post Company when it was struggling in the 1970s and in the Coca-Cola Company when it was struggling in the 1980s, which later turned out to be very profitable for Berkshire Hathaway. Charlie Munger's last investing strategy is to invest for the long term. Charlie says, the big money is not in the buying and selling, but in the waiting. This means that a lot of money is not made in frequently buying and selling stocks, but in holding stocks for a long time. So, that was Charlie Munger's investment checklist. Invest in high-quality businesses. Invest in businesses that are understandable. Look for a margin of safety. Invest for the long term. The second lesson I learned from this book is about mental models and a multidisciplinary approach to investing. First, let's understand what mental models are. The easiest definition is that a mental model is an explanation of how something works. Your mental model is your way of thinking about how anything works. For example, Parkinson's law. Work expands to fill the time available for its completion. If you are asked to design a post within 2 hours, you will do it immediately. But if you are asked to design a post in 2 to 4 days, you will design it in the last hour of the 4th day. Charlie Munger says that you should focus on expanding your mental models by gaining knowledge from different fields like biology, psychology, history, economics, and mathematics. Now, let's come to the multidisciplinary approach. Just as we learn from mental models how something works, with a multidisciplinary approach, we take knowledge and experience from different mental models and make our decisions on this basis. The third lesson I learned from this book is about human tendencies that can impact decision-making and investing. Number 1, confirmation bias. Charlie Munger explains that a person always wants to know information that matches their beliefs, but often ignores or refuses to accept information that does not match their beliefs. For example, if an investor likes a specific company and wants to invest in it, they will believe news that writes good things about their selected company and will ignore negative articles. Number 2, availability bias. Charlie Munger says this is a human tendency where people trust information that is readily available rather than studying a broad range of data. For example, investing in a company based on the advice of a favorite content creator or a latest news headline is an example of availability bias. Number 3, incentive cause bias. Charlie says that every person is incentive-driven, and it is human behavior to take quick action where they see a benefit. Because of this bias, many people lose money in the stock market because they see the potential for quick money. Number 4, social proof. This is also a human tendency. In this tendency, a person does all those things so that they can become part of a community. For example, if a specific type of dress is in fashion and a person doesn't like it, they will still wear those clothes because they don't want to look outdated in their social circle. This happens in the stock market too, where if everyone in your social circle is trading or frequently buying and selling, then you also do the same. Number 5, overconfidence bias. In this, a person has too much confidence in their own ability and judgment. For example, if you have invested in a stock, you think that this stock will only go up because you have invested in it, and you can never be wrong. Now, let's come to the 4th lesson, Charlie Munger's special investing advice. Number 1, calculate the risk. Before making any investment, whether it's stocks, real estate, or a new business, you should calculate the associated risk. High risk, high reward only sounds good in theory, but is very difficult in practice. Charlie says to always stay away from a person whose character is not true, and don't do any business with them, because that is also a risky investment. Number 2, independence. In this book, Charlie shares a code. Only in fairy tales are emperors told they are naked. This means that in real life, those in powerful positions are not always told the truth about themselves, whether out of fear or some other reason. Similarly, when most people trust a specific thing or act in a specific way, it doesn't mean it's the best thing for them. Charlie talks about objectivity and rationality. Being objective means you look at any specific thing without any personal feelings or judgments. Being rational means when you make decisions logically. Charlie says that you can only be objective and rational when you have independent thinking, which prevents anyone from influencing you easily. Another important thing he says is, if you keep doing what everyone else is doing, you will get the same results as everyone else. So, in this too, you're not being independent. Number 3, preparation. Charlie says, the only way to win is to work, and hope to have a few insights. This means if you want to achieve success, you have to put in a lot of effort and work consistently. You cannot expect that one day you will get lucky, win the lottery, and become very rich. Therefore, when you work hard daily, you are preparing for success. Number 4, intellectual humility. Charlie Munger believes it is very important that you have intellectual humility, which means you admit that you know very little. Because of this realization, you focus on learning more and also become wiser. Number 5, rigorous analysis. This means using a systematic approach or scientific methods so that you don't listen to your gut feelings. When you value something, you shouldn't value it just on the basis of price. There are other ways to calculate value, such as quality, advantage, and long-term impact. Another interesting concept he shares is the concept of progress. Merely staying busy or active does not lead to progress. You have to achieve something meaningful in life or accomplish a very difficult task. Only that will be called progress. He also discusses a concept of thinking forward and backward. In this principle, you should consider both the positive and negative outcomes of every decision whenever you make a big decision. Number 6, allocation. Charlie says that the proper allocation of capital is an investor's number one job, meaning where and how much to invest your money is the most important task for any investor. Number 7, patience. In this context, Charlie says that developing the skill of patience is very important because you don't see daily progress. Even when you invest, it is only after considerable time that you start to see results. But many people become impatient in this phase and break the compounding process. Charlie says, enjoy the process along with the proceeds because the process is where you live. Meaning, enjoy the process. Don't think so much about the results. Number 8, courage. Charlie says, be fearful when others are greedy and greedy when others are fearful. This means that when everyone is being overconfident and investing more and more money in the stock market, you should hold back. But when everyone is afraid to invest, then you should invest. For this, you need to build courage from within, which means taking action with confidence and trusting yourself. Number 9, change. In this principle, Charlie says that every person must bring about change within themselves over time. If you don't, you will always be left behind. Number 10, focus. Here, Charlie says that a person's greatest quality is their ability to focus. So, once you have set a goal for yourself, you must develop an unbreakable focus towards it. If you get easily distracted, you will never be able to achieve anything significant. Now, let's come to the 5th learning. Successful people do simple things greatly. Charlie Munger says, spend each day trying to be a little wiser than you were when you woke up. Discharge your duties faithfully and well. This means that Charlie Munger believes we should all do the most important tasks of the day sincerely and give our best, and at the same time, focus on bettering ourselves every day. Charlie says that life in general is very difficult, so he does 3 things to always stay positive. Have low expectations. Do your work 100%, but keep your expectations very low. Have a sense of humor. Take your work seriously, but don't take yourself too seriously. Surround yourself with love. Spend time with friends and family if you can. This also helps you stay positive in life. So, that was a detailed summary. If you liked it, you can subscribe to the Books Build Minds channel. I will meet you in the next video. Until then, keep reading, keep growing,